Hi, and welcome to Millennials and Homeownership, what you need to know. My name is Jason Wagner. I'm a real estate broker with Kale Realty in Chicago and the owner of a small house flipping business named Broken Window Investments. Now, after being in the real estate market for a few years, I've come to learn that many of my millennial peers know absolutely nothing about homeownership. And it's interesting because I'm talking about the most educated generation ever, those with bachelor's, master's, and even doctorate degrees. They don't know how to buy a house or condo. Now, if this is how you feel, don't worry, because you're not alone. This isn't something that was taught in school, and frankly, millennials don't have it as a high priority right now. You see, my generation is struggling to get by. We find ourselves living paycheck to paycheck because of the massive amounts of student debt that we have. And now the high-paying jobs that we do pursue, those are often located in urban areas. And so, because we want to have a balanced lifestyle and not spend all of our time commuting back and forth, we find that we have to absorb those high costs of living standards. And then to top it all off, the apartments that we do live in, it seems that our landlords are increasing our prices year after year after year, even though we may not get the wage growth. So the problem is that millennials are having a hard time saving. And so the money that they do end up saving, it doesn't go towards the down payment of the home because they often think that it may be too far out of reach or unattainable. And so they take that smaller savings and they put it more towards an experience, like traveling the world or checking off some items on their bucket list. Now, throw in the Great Recession that we all witnessed our parents go through, and it's no wonder that millennials haven't made homeownership a priority and frankly, just don't know anything about it. Now, don't get me wrong, millennials still think that homeownership is the American dream. And so I decided to create an educational video about how to go about buying your first property. And so today's segment is going to focus on the financing that's involved in a real estate transaction. And so I brought in a trusted lender. Gidget Schejbal is a mortgage broker and owner of her own small business, Partners in Mortgage. Now, Gidget has been originating mortgages for over 20 years, so she has a ton of knowledge and experience to bring to the table. So Gidget, thank you for joining us today, and let's just jump right into it. I would like to ask you the top 10 questions that my millennial peers have been asking me. So the first one is, what all is included in a mortgage payment?
Well, thank you for inviting me, Jason. I'd be happy to answer your questions. And what's in a mortgage payment is basically a principal and interest, which is how you pay down your loan, your real estate taxes, your homeowner's insurance. Depending on your down payment, there could be private mortgage insurance, and that's known as PMI.
Okay. So if the average rent in Chicago is about $2,000, how can someone take that rent price and translate it into how much property they can afford?
Well, if your rent is $2,000, you could probably purchase a home at around $250,000. You can put down a minimum payment, and after you pay the principal, interest, taxes, and insurance, that should be around $2,000.
Okay. And so number two is, because we mentioned a little bit about down payment, how much do I need for a down payment?
Well, if you're looking to put a down payment, basically if you're a veteran, you don't have to have a down payment. If you're a first-time buyer and you have pretty good credit scores, you can put down as little as 3%. If you're a little bit concerned about your credit scores and you do an FHA loan, you can put down as little as 3.5% and you can still get a great rate.
Wow. Okay, so what of the deals that you're doing, what is the average amount of money that people are putting down?
Well, I've noticed a lot of people are putting down payments of anywhere from 5 to 10%. I think a lot of people also think that they need to have 20% to put down, but that's definitely not the case.
Yeah. And actually for a first-time buyer, 20% is often a rarity, would you say?
Yes.
Yeah. And so let's take that example of where we said that $250,000 was kind of the average price that you can afford on a $2,000 rent payment, right? And so if we're looking at a down payment of only 3%, that would equate to about $7,500, right?
Mm-hmm.
Okay, so $7,500 versus the 20%, which would be much greater than that. Okay, well, great. And Gidget, what about for those that maybe have good cash flow but don't have enough savings and maybe they're not cash rich? Do they have a solution of getting into a property?
Well, if you have an option to ask a family member, like a parent, for a gift, that would be one option. Or if you have a relationship with your realtor and mortgage broker, it would be a good idea if the realtor would ask the seller to negotiate possibly some kind of credits towards closing costs, or if the mortgage broker at the time of locking a loan can possibly get you some kind of credit from the lender.
Number three, does my credit score matter?
Yes, credit score does matter because it's going to depend on what you're going to qualify for if you're going to qualify for a mortgage, and also it's going to determine what interest rate you're going to be getting.
Okay. And now what credit score will get me the best rate?
If you're doing a conventional loan, if you have a 740 or higher, you can get the best rate in town. If you're doing an FHA loan and if you have a score of 640, that will also give you a great rate.
Okay, so 740. So for someone that's shooting for 800, it's probably not necessary to have that perfect credit score.
That's correct.
Okay. Now, what about if I had bad credit? Can I still get a loan?
Well, if you go to a mortgage broker like myself, since I have a lot of different lenders to choose from, I have actually done credit scores as low as 500.
Okay.
But it is case by case.
Sure. So number 4 is, and this is a really big one for millennials because we all have this. Do student loans impact my chances of getting a loan?
Yes, student loans do impact your chances of getting a loan because it's looked on upon the same as you would have a car payment or any other installment debt. So it is used against your qualifying ratios. If you are in deferment, it is still used against you. And if you don't know what that monthly payment is, the lender will use 1% of the outstanding balance.
Okay. Okay, but just because you have student loans doesn't necessarily mean that you're not going to qualify for a loan, is that right?
That's correct.
Okay. So somebody should just call your mortgage broker and talk about their individual situation.
Absolutely.
Okay. All right, and so number 5 is, what are closing costs?
Well, closing costs are fees at the time of purchasing a home, and they would be like for lender charges, title charges, appraisal, possibly depending on what area you're buying, the government tax transfers, and your attorney fees. These are all considered closing costs.
Okay, so how much should we allocate for closing costs?
I would say anywhere between $4,500 and $5,000.
Okay. What if I don't happen to have that additional money on top of my down payment for that closing cost? Is there anything that we can do?
Well, as we discussed earlier, Jason, if you have a good relationship with your realtor and your mortgage broker, then you could possibly negotiate some closing costs with the realtor and once again, possibly get some credits at the time of locking a rate from the lender.
Yeah, and I think this is a very powerful thing that most first-time buyers don't realize is that you can actually you could probably close on a property without having to pay any closing costs. Have you seen that before?
I did. As a matter of fact, I had some borrowers that walked into the closing table with absolutely no money.
That is really, really powerful. And so it's really good to have that strong relationship with your broker on the front end, is that when you are submitting an offer, say we're submitting on that $250,000 property, and so we submit $250,000, but we're looking for $3,000 in closing credit, okay, and then on the back end, maybe your lender could give you an additional $2,000. And so all of a sudden, you are not paying anything for closing costs. So that would be a great example. So number 6, should I shop lenders for a good rate?
Well, everyone does have the right to shop for a good rate. However, if you come to a mortgage broker, we shop for you. We have a lot of different lenders that we work with, and we want to make sure that you get the best rate.
Yeah. And actually, you and I, we were meeting yesterday, and I asked you a personal question about my own situation, and you were shopping rates literally right in front of me. You had an answer from 3 different lenders in a matter of a few minutes, and that was really, really impressive. So what about some people that are really loyal to their banks, and maybe they want to stick with their bank, but they want to also make sure that maybe their bank is giving them a good rate? What happens if they shop? Is it going to impact their credit score?
Well, if they shop for a mortgage, it's not like a hard pull like if you would be purchasing a car. So it does impact it, but very little. But the nice thing about working with a mortgage broker is we actually only pull your credit once. So you don't have to worry about your score getting lowered for any reason.
Sure, so some other lenders would pull it once for them, once for another, so it makes sense. Okay. And so number 7, what does escrow mean, and why should a first-time home buyer be aware of this term?
Well, an escrow is what the lender sets up for the borrower to pay like the real estate taxes twice a year, to pay your homeowners once a year. It's not always mandatory that you set up an escrow, but it is a lot easier, especially if you're a first-time buyer.
Yeah, and it seems that escrowing makes a lot of sense for people that just have a hard time saving for those big lumpy payments. So a big lumpy payment would be your property taxes, which is only due 2 times a year, and oftentimes those are thousands of dollars. So if you escrow it, it seems that if you're just making that consistent monthly payment, you don't have to worry about your big chunks coming out when those payments are due. All right, so number 8 is what is the difference between a pre-approval and a pre-qualification?
A pre-qualification is basically just general information. Ask the borrower what kind of income they have, what kind of down payment, and then we kind of determine what price range you should be looking at. But a pre-approval is when I actually get all the information from them, like the W-2, the pay stubs, their bank statements, I pull their credit, and then I look at the whole picture, and then if I determine that there might be a question about whether it will get approved or not, then I run it through what's called AUS underwriting, and this way all the guesswork is taken out of the way.
Okay. Yeah, and so your realtor is really going to want you to have that pre-approval when you're ready to write an offer on a property, because the seller is not going to take you seriously if you only have a pre-qualification. They're going to want to see that pre-approval, right?
And it's great for negotiating, absolutely.
Yeah, absolutely. Okay, and so number 9 is, from a lending perspective, what happens when we do get an accepted contract? So after we've toured all these properties, we made the offer, and it's finally under contract, what happens now?
Well, if the client is already pre-approved, then it's fairly simple. Because at that point, we get your contract, we submit it to the lender, they do initial underwriting. Once that comes back, we figure out exactly what else is needed, and then we order the appraisal, we get the title, insurance, and you're done.
Okay, and what is a clear to close?
Well, clear to close basically means that the lender has already given you the loan commitment, and you can tell your attorney that they're ready to schedule the closing.
So the money is going to be there, all you have to do is show up at closing.
Absolutely.
Right? Okay, awesome. And so number 10, how long does it take to close on a property?
Well, typically a contract will say 30 to 45 days because there's so many people involved in a transaction that we don't know exactly how long it will take. But you can actually close as quick as 12 days, which I have done. It all depends on the borrower and the seller. How quickly do they want to close?
Sure, sure. And when I meet with first-time home buyers for the first time, I like to tell them that they should plan anywhere between 2 to 4 months for the whole process to take place. So if you were to plan 2 months for the search process and then another 2 months for the close process, that would be a pretty good estimate. Would you agree?
I agree.
And so Gidget, is there any other thing that you would like to wrap up with as kind of a final thought?
Well, all in all, I'd like to say is don't be afraid to call your mortgage broker. Relationships are very important, especially if you're making the biggest purchase of your life. You want to make sure that you know all your options.
Yeah, and I would piggyback off of that because I think having a really strong relationship with your mortgage broker and also your real estate agent is really, really important. And when we're talking about a process that could take anywhere between 2 to 4 months, you have to remember that you may actually be in communication with your agent from the time that you start looking at a property to the time you close. So you have to have really open lines of communication and feel comfortable working with that person.
That's right.
So, and also, as we kind of talked about, you can actually get a better deal in certain situations because you have those open lines of communication.
Yes. If we know the needs of your borrower, then that's what we're going to try to get for them.
Yeah, absolutely. Well, Gidget, thank you so much for coming in today. I think we got a lot of great information out of this. If somebody wanted to get a hold of you, maybe start a pre-approval process, how could they do that?
Well, they can call me on my cell, whether it's evening or weekend. I'm always available, and it's 630-330-3391. Or they can always email me at gidget@partnersandmortgage.com.
Sure. Sure. Thank you, Gidget. And if anyone wanted to get a hold of me, you feel free to call or text me. My number is 847-997-1639. You can feel free to email jwagner@kalerealty.com. Also, don't forget to follow me on Instagram, JasonWagner2842, or look me up on LinkedIn under Jason Wagner. Well, thank you again, Gidget. Really appreciate the time and the effort here. And we hope that everyone was able to gain something out of this, and we hope everyone has a great day.